Okay, so everybody, let's begin with our session on the pre-June mock discussion. We're doing section A and B on the CB platform. So I will just select my paper that I've assigned. Just 1 minute. Just goes. Okay, so I'm just beginning with it. I'm sure if you are also doing along with me, then you have also selected the paper, the pre-June mock, and let's do it together. Okay. Let's continue. Okay, one thing important that I want to discuss is that some of you may be appearing for these exams for the first time. So then reading these instructions is necessary and absolute necessary. But if you do it before your exams only, like now only, when you're doing your mock or when you're doing the practice, that time also you please read all the instructions very carefully, so that in at the time of exam, you don't really are troubled by for that fact that I have to read these portions clear, so you can save your time on there. We'll just quickly go to the exam. Okay, you can see the question is there. The paper time would be 3 hour 15 minutes for the entire paper. Okay, now the question many times comes in, ma'am, what should we start with? Should we start with a section A question or a section B question? Section A is a 50 marker, of course, lot of provisions, a lot of sections to cover, and then section B. I would always recommend you to start with section B first, so and then we move on to section A. Okay. But right now, I'm taking section A first because that would also make you analyze how much time it is taking for us to solve section A. Now, how do we do the question solving and the reading of the question? Because reading is essential, very essential in the correct way. And with the correct reading, you can reduce your time by 10 to 20%. Okay, so correct reading is very, very important. Now, how would you do it in the correct way? You have to first read the paragraph which is in front of you. Always we would read this first. Then before reading the three exhibits, you will see the requirement. As per the requirement, you will go to the respective exhibit and then read it. Okay. You should assume that today's date is 1st December 26. You are an ACC student working for a firm of accountants. Your manager has had a meeting. Your manager had a meeting with Aruna and Camilla, potential new clients who are partners in the AK partnership. Your manager also requires your help with a. So these are partners in the AK partnership and they are your potential clients, Aruna and Camilla. Your manager also requires your help with a long standing client, Nova Limited, which is a part of Orbit Group Limited. Okay, so they are your existing client. Advice is required in relation of in respect of capital allowances that will be available to the AK partnership in the final trading period. So run your brains and just think in the cessation year which are the capital allowances available. The inheritance tax, which is payable by Aruna in respect of transfer of shares into a discretionary trust. In the impact of corporation relief on the CGT tax, CGT payable on the disposal of the business and subsequent gift of shares by Camilla. Okay. And the correction of errors in the corporation tax computation of Nova Limited. Involving various items of expenditure, research and development cost, and the use of group losses. So these are the four testing areas that probably your advice is needed for. There are some other ethical issues to be considered if the firm, there are also some ethical issues to be considered if the firm is to accept Aruna and Kamala as the new clients. the following exhibits, which are available on the left hand side of the screen. They provide information relevant to the question and outline um, what you need to do. So, first is AK Partnership Aruna and Camilla, Nova, and then you have manager's email. Okay. Managers always remember the third exhibit, the manager's email will always carry the requirements to be fulfilled. So let's look at first the requirements, and based on that, we will go to the respective exhibit. First, obviously, we'll go to exhibit 3 after it, because that will cover the detailed requirement. Now you can see the first question here is, you should assume that today's date is 1st December 26. Respond to the instructions in the email from your manager, and the split of marks will be given in exhibit 3. Professional marks will be awarded for the demonstration of skills in communication, first skill, analysis and evaluation, second skill, skepticism, third skill, and commercial acumen in your answer, fourth skill, which is for 10 marks and 40 marks. 10 marks are the free marks that I've been always talking about. Now let's go to exhibit 3. And we'll do the question one by one as per the requirement. Okay, the first one is, there are a number of separate tasks that I would like you to perform as detailed below. Becoming tax advisors to Aruna and Kamila. It is anticipated that Aruna and Kamila will require some highly sophisticated and specialized tax planning work in the future. Okay, so they would require highly sophisticated and specialist tax planning work in the future. Set out the information that would be required and the actions that should be taken by the firm before it agrees to become the tax advisors to Aruna and Kamina. So here I have to give the answer to that. What would be the prerequisites that we will require before we become tax advisors to Aruna and Kamila, and this is only for 5 marks. That doesn't mean you have to write 5 bullet points. That basically means that you have to write your answer considering the fact that at least 5 points should be covered minimum. Okay. Now let's just always give yourself 30 seconds to think over what all you will write. Only then you start writing, because your answers should be organized. Okay, let's start writing. Give yourself 30 seconds and then we start writing. Okay, these are individuals, right? Aruna and Kamila. So, what are the requisites when it comes to individuals, and when we go for acceptance of the appointment? What are the prerequisites to be done? Let's write about them. Okay, so I will write here question 1. If you want, you can bold it. You can write control B also. Okay. Now I will write question 1. Here a lot of shortcuts are disabled, but whatever are enabled, you can use it. Like control C, control V, control B, control I. All that you can use. Okay. Now the first question is, what are the action points, and what are the information that we need to have, or the prerequisites before we take an acceptance of the appointment with Aruna and Kamila. So I can write here, um, uh, as a prerequisite, the information needed before the acceptance of appointment. Before the acceptance of appointment, in respect of Aruna and Kamila. What would be that? If you remember, for individuals, we need the identity proof, right? We need the address proof. So all that we need. So number 1, identity proof. And number 2, address proof. That's all we need for an individual. Done. Okay, then it says about the actions that should be taken. Yes, KYC. But we can't write just KYC, I have to write the answer. So now the second point is, what is the actions that should be taken by the firm. So like, getting in touch with the previous appointer, the previous auditors, and all that information we will write. So look here, actions to be taken by the accounting firm. Okay. Number one, or you can write it in paragraphs also, no need to write bullets. So you're giving me a answer. Okay. Can we try containing previous? Yeah, of course, contacting the previous tax advisors. Of course, this is one of the point. But then, how would you write? Would you only write that we will try contacting the previous tax audit advisors? No, right? So then, what are we going to write? So you have to always write for every point. You will write small paragraph. Never a bullet. Never a a single line. You have to write it in the paragraph. So we can say that, like you said, the firm should try to contact their existing tax advisors, right? And what have we given? Absolutely. Okay. Yeah, so they should try to contact their existing tax advisor and uh, and get information about um, the existence of no um, actions by them to preclude the acceptance of the appointment. Correct? This is how we will form. So it's a small paragraph that I've given. You have to write your answers like this only in small paragraphs. You can elaborate it also as per your own need, but let's say I want to keep it like a small paragraph, so I will keep it like that. Now the second point also that you said, I will cover it, um, about the competencies. uh, the firm should ensure that the desired the firm should ensure that the desired competencies um, to carry out. There was a term written in the question. What was that? Just a minute. It will be auto save. Don't worry. Sophisticated and specialized tax planning work. I will use that. Always use the information given in your question also to carry out the sophisticated and specialized tax planning work. Okay, the firm should ensure the desired competencies are to carry out the sophisticated and the specialized tax planning work uh, required by Aruna and Kamila is existing at the firm. Okay, so this is about the competencies. What about the next point? Can we write about? Integrity by ensuring the specialist tax advisor has nothing to do with the money laundering or tax evasion. Yes, absolutely. No ethics are breached, or even we can see, yeah, so we can see here, it has to be ensured that, after the acceptance of appointment with Aruna and Kamila, uh, there would be no breach to the ethical principles as per Code of Ethics. Okay, there'll be no breach of the ethical principles as per the Code of Ethics, and and there are no threats Just 1 minute. Okay, and there are no threats to the compliance with the ethics, right? Also, however, if there is any threat, then if that threat, if the what do you call, yeah, if that threat can be reduced to accepted level by mitigating, right? If it can be reduced to an accepted level um, by mitigation, by mitigating the risk or applying, we had no one more con safeguard safeguard guidelines. Okay, then the acceptance of appointment can continue. Okay, clear? See, this is done. This one also we have done. Now, what about the next point? What all next point can we have? It's a partnership. One more point, that there is a very general point we can write. It should be ensured that by accepting the appointment, to work with both Aruna and Kamila, no conflict of interest whatsoever should arise as a result of favoring one for another, in which event it should be ensured that different members of the firm represent both separately, so that there is no conflict of interest that is arising, because there are two individuals. Done, and there are four pointers that we have written. And fifth one, we wrote about the information. Is this okay? If you want, you can click the pick also of it. I mean, the reason being, um, maybe when I submit it, it may not give me the answers back to me. Okay, anyways, so here we have done it. So you can see the 5 marks breakup. 1, 2, 3, 4 points, and this is 5. 5 points you've written them in the paragraph, no bullets, you get 5 on 5. Done. Let's go to the next one. So I've done the first one. Let's see the next one. The next question says the 4 marks question. Now you'll go to exhibit 1, and I want you to prepare a memorandum. So you have to give the perfect performer for memorandum for the client file in respect of the following: capital allowances of the AK partnership for its final trading period. See, one thing, please remember, when it's a final trading period, no allowances are allowable except for balancing allowance and a balancing charge. Correct? And so that you should have in your mind. Okay, and that we have to write. And then a detailed explanation for the calculation of capital allowances of AK partnership for its final year of trading. You just have to give the performer then, because if the details are already given to you, then you can put it in the details. Otherwise, you'll give performer. Ending with the sale of its equipment. So the proceeds are given to you for the sale, which is 100,000. So disposal proceeds you will calculate lower of the two. Okay. So this is given to you. This is only 4 marker, a very small question. Let's read it here. AK partnership. Okay, now points discussed in a meeting between you, your manager Aruna, and Aruna on 1st December 26. Now, what is it? 2026. Background. Aruna and Kamila, they began trading as the AK partnership on 1st May 2021. Accounts have been always been prepared to 31st March each year using the accruals basis. The partners are each entitled to 50% revenue and 50% profits, capital profits of the business. On 1st February 27, the whole of the AK partnership business can be sold as a going concern to Glow Company. Can we have the succession relief for capital allowances? Let's see that. And can we also have an incorporation relief? That can also be checked here. Okay. The consideration for the sale will be a mixture of cash and sale shares. The capital gain tax relief on the transfer of a business to a company will be that is incorporation relief will be available. So incorporation relief is available, but for succession, nothing is given. Okay, there is given the sale of the business. Let's see. Aruna and Kamila will both pay tax at the additional rate in the tax year 26-27 and anticipate continuing to do so in the future. Okay. And so they are an additional rate taxpayers always. The consideration for the sale will be a mixture of, they are very wealthy individuals who use their CGT annual exempt amount every year. So they use CGT amounts every year. Both of them are long-term UK residents. Now you know about the from the overseas taxes, what is long-term UK residents, right? Now the sale of the business on 1st February 27. The assets of AK partnership have been valued as set out below. All of them equipped and all of the equipment they qualified for capital allowances. Okay, so the details are given, and the total of the consideration will be equal to the value of assets sold. Aruna and Kamila will each receive consideration of 10,000 and 110,000 in cash and 2 lakh shares. Only a 3% holding in Glow. Since it's only a 3% holding in Glow, it really doesn't mean there's a controlling part. So succession relief will not be there, because for that we need that controlling nature to be there, right? Okay, so I hope you've read the question. Now let's start solving it. And now the theory part, not all theory part I'll write because it will take a lot of time. So I will discuss them orally also. Okay, now we have to write the memorandum, and then the question says, let's go back to the question. The question says that first question is give a detailed explanation of the calculation of the capital allowance of AK partnership for its final trading period. So give a detailed explanation of the calculation, only 4 marker. So here what can we do? I can even, since it's a calculation, I can write everything on spreadsheet also. Not a problem. Because with solving also, I will be doing it here. So I can write everything here. Okay. So I will write here question number 2. Now the question says that first we have to write it in the memorandum format. You know the basic format that I've already given to you. So that format we will do memorandum. Okay. Now how do we do it? To, from, date, subject. Correct. It is to whom, to manage, to, we always write to the files, from tax senior. Date was given as 1st December 2020, 2026, right? It was given, no? Today's date, right? And the subject is capital allowances in AK partnership. Okay. Capital allowances in AK partnership. Done. So we are done with the basic performer. Now let's just write here. Um, the purpose of the memorandum is to give advice in relation to the capital allowances that will arise, that can arise, or that arises in the final year of trade. Okay, in the final year of trade. Done. On the final year of cessation. And here it is upon the sale of business to Glow Company. Okay, to Glow Company. So this is the purpose. No issues. I'll just show you the exhibit. We have already discussed the exhibit, right? We have discussed it, right? Now I'm just writing it. And when we do more discussion and wherever exhibit is needed to be seen, I will show you that. Okay? Or we can do one thing. And keep it like this and open the exhibit. Okay? So we will be doing it parallelly. Okay. So now I hope it is clear. Now the point is that we have to give them detail about the capital loss. So now you can write very, very clearly here. We know about that capital allowances. We have to first comment on what are the capital allowances that will be available in the final year of trade. So you can write it here that only the balancing allowance and balancing charge will be available in the final year of trade or final year of cessation. The other allowances like AIA, FIA, WDA, small pool WD, all of these will not be available in the final cessation year of trade. Done. This you will write. Then the next part of the question also talks about the calculation. Show how you will be showing the capital allowances. How would your working be there? So then you can show the working like this because we don't have any data. So I will just prepare the performer. Working for the calculation of I'm just writing that theory part. We have already discussed it orally. Okay, so working for the calculation of balancing charge or allowance. Actually, it can be both. F2 will not work. So I will do it here. Balancing allowance. Okay. How would you do it? So just prepare the WDV format that we do normally for a mean pool. So we will have TWDV brought forward. Okay. Now, if there is any additions, we will just add no allowances will be given. So add additions in the year. Okay. Then we will reduce any disposals in the year. Okay, we reduce the disposals, we add additions, then what we do? Nothing. We will just have the uh what do you call it? The balance that we will be calculating, right? But one thing we'll be doing, we'll be reducing a disposal. There was a disposal of 100,000, right? So there will be a sale of assets. So that will lead to the disposal of 100,000. Only this data is given to me, so I will just write this data. Now you will get the balance. See here, I will write total, or we can simply write X. And here, no underlining is there, only you can use, so you will use it. Now, the question is, ma'am, can we extend the cell? Yes, but can you minimize it? No. Okay. Okay. Now I've got the total. So what do we do when we have the total? It will be either balancing charge or balancing allowance. Accordingly, it will be adjusted. Okay, accordingly it will be adjusted. Done, clear. This is what we do. Now we can write one more point here that the what do you call, the succession relief will not be available. Please write that also. The question is not saying, but you will get your marks for skepticism, for analysis by when you are answering the parts. For the parts that is not mentioned as a direct requirement. Okay. So now here we can write there that succession relief will not be available. You know why? Because there is no control. So succession relief will not be available, and you will explain that in this case. And why it will not be available? Because the controlling is not there. The Glow company is only taken over 2% or 3% of the shares. So since there is no controlling, hence succession relief cannot be enjoyed. Clear? Done. Madhwan, any queries? So we're done with the first part. The 4 marker is done. Let's go to the next one. What is the next requirement of the question? So we are done with 4 marker, we are done with 5 marker. 9 markers are done, 10 are skills marks free, 9 plus 10, 19. So out of 15, 19 is done. We are just left to do 21 marks more, 31 marks more. Sorry. Okay. Now the next one. And Aruna transfers of trust to. No, but we don't have figures, and not every time ATX will have figures. If there are figures, then you will do calculation. You will calculate what is BA and BC available. Okay. Now, the second is, now here we have a calculation in the second part. A calculation of the IHT payable by Aruna in her lifetime in respect of the gift of shares to the trustees of the discretionary trust on 1st July 27, and the date by which tax will be payable. Also, please note that the gift will not qualify for the business property relief as it is relating to the shares. The question is very clear about it. So we just have to do the workings normally. Okay, let's do it here. Let's talk about the trust. Have you written something? Okay, so now we're just doing the calculation for trust. So look at my screen, please. We will just go to this trust part. Here, you can see there is a trust part here. The transfer of shares to the trust. So on 1st July 27, now here parallelly, I will do the working. Okay, so I will write here second part. Calculation of IHT on transfer of shares to the trust. Okay, so calculation of IHT on the transfer of shares to the trust. Okay, so let's do the calculations here. And here, now one more point, how would you insert the symbol? Let's say I want to insert pound symbol. You have a single symbol option here. You can insert it. Okay, you will have to write insert here. Here also insert, no double click will do. Okay, job normally we have two, so I will have two columns. Now, on 1st July 27, Aruna will make a gift of 15,000 of her shares in Glow Company to the trust of discretionary trust for the benefit of her niece and nephews. You know what is a discretionary trust, correct? Now, Aruna will pay an inheritance liability. That is, a donor is bearing the liability. So we will pay tax at 25%, correct? In respect of the gifts, the trustees will transfer the shares to the beneficiary over the life of the asset. Okay. Aruna has already made the following gifts. That is the previous gift that we know. Okay. So now here first I will write transfer of value. Okay. Now here 15,000 shares. And what is the value of the share? Is it given to you anywhere? We can calculate, no? 110,000 is the cash. Shares is 200,000. So the value of share is given to you. For the purpose of giving our advice, the value of a share in Glow Company is on 1st February 27, it is 4.5. We are taking the case of July 27, right? July 27, the value is 5 per share. So here my value will be, you will take equal to here. Okay, and you will write equal to the total number of shares were 15,000, right? 15,000 multiplied by 5. So I get 75,000. I can cut and paste here. Right, this is your transfer of value, TOV. Now please reduce the annual exemption. Annual exemption. Now first I will write current year and then I will write previous year. Current year is 26, 27 in this question. No, this is a transfer on July 27. So current year is 27, 28. Right? So current year is, I will write here 27, 28 because this has to be very clear. Okay, and the previous year is 26, 27. Okay, now let's see if there is any transfers made previously also. So Aruna has made the following gift on 1st June 25, that is 25, 26, and on 1st August also 26, that is 26, 27. So the gifts are already made. Even if it is a PT transfer, doesn't matter. Since the gifts are made, no AEA will be available for the previous year. So here I will just delete the previous year, and current year I will give 3,000. No other exemptions. It's a trust transfer. So we will just take the balance. So I get here 72,000. Okay. Now I will reduce NRB. How would you reduce NRB? 325,000 less any chargeable transfers GCT made in the 7 years prior to the date of gift. So date of gift is 1st July 27. That is 1st July 20, 2nd July 21 onwards. We will take both these gifts are made after 1st July 21. And this is a gift to a trust. This is to nephews. Nephews we will not consider as it is a PT transfer, but yes, trust one we will consider for sure. Okay, now the gift to the trust is made and the value of the gift is 280,000, but it is not GCT, it is the value of the gift. So you need to take GCT. And how would you take GCT? It was a first transfer, right? So we will just take this value and we will reduce 6,000 annual exemption of the current year and annual exemption of the previous year. So here I can write it in the bracket. So I will write here 280,000 less 3 and less 3. Done. We have taken the GCT. Now that value I will reduce from 325. So how much I get? Please don't use calculator. Always do the calculations here only. So here you can do it. 325,000 less 280,000 less 3 less 3. So I get here 51,000, right? So we will reduce 51,000 and then we will get now taxable value. Okay. Now get the taxable value. Use the formula. Always you have to use formula for Excel. Right, Madhavan, I think you're following. And now we know the IHT rate since the tax is borne by the donor. I will write here IHT borne by donor. Okay, and this is the lifetime IHT borne by the donor. So the tax rate will be 25%. Hence, IHT payable will be 5250. Am I clear? So IHT payable is 5250. And when is the IHT due for payment? The IHT will be due for payment. You have to see the period, right? This is a lifetime tax, and lifetime tax, and the gift is made in July. When the gift is made in a July, that is first 6 months, right? The breakup is there, no? First half and second half. So till 30th September we take here, then the next period will take in the second half, right? So here, if that gift is made in July, so the due date will be 30th April, following the end of tax year. So tax year is 27-28. So the due date will be 30th April 28. 28. Done. Okay, tell me if you have any queries, any of you. Any queries, Madhavan? Okay, are you clear now? See, IHT payment dates, when we take, we always see for the lifetime IHT that where is, just 1 minute. I'll just show you here. I'll just share one more screen so that I can just quickly show you that portion. Just 1 minute. Okay, I'll just share my screen. Can you see my screen? Is my screen visible, Madhavan?
Yeah, ma'am. Yeah.
Madhavan, can you see my screen? Please just confirm me.
Yes, ma'am.
And here is your answer that you have a query for the due dates. So look here. For a lifetime tax, we see if the transfer is made till 30th September, if the transfer is made after it. For the transfers that are made till 30th September, the due date is 30th April, following the end of the tax year. But when the transfer is made in the next 30th, after the period of 30th September till 5th of April, so then the due date is 6 months from the end of the month of transfer. Since July is till September, the due date is 30th April. Otherwise, it would be 6 months from the end of the transfer. I hope I'm clear. If you have any queries, you can ask me. So we are done with this also. Okay, now let's take the next one. Okay, okay, let's take the next one. Mhm. So we are done with this, and let's go to the requirement. What is the requirement now? So what we've done is we have covered the 6 marker also. A easy one. It was very easy to score 6 marker. You don't have to write also anything. It's very easy. Let's go to the third one. The third one is for, wait, why it is not getting. Yeah, the third one is a 14 marks. Now that's a jumbo question. So 14 plus 10, 24, the skills one, plus 6 is 30, plus 9 is 39. So with this question, we will be covering around 39 marks, and then we just be left with 11 markers for section A completion, and then we will do section B. Clear? Okay. Any queries so far, Madhvan? Okay, let's take this. So now the third part says, Camilla, impact of incorporation relief. A review of whether or not Camilla should disclaim incorporation relief. So we have to review whether the incorporation relief should be claimed or should be disclaimed. See, by default is it will be claimed. We have to make an election to disclaim it. Oh, I'm sorry. I'm sorry. Just 1 minute. Okay, so now we have an option that we can have the disclaimation. See, by default, the incorporation relief is to be claimed. Okay, now we can make an election that we do not want to claim it. So here we are just reviewing whether it should be claimed or not claimed. The review should encompass the sale of the AK business assets, the AK business, the gift of shares to Camilla's son, and the effect of incorporation relief on the base cost of the remaining shares owned by Camilla. If we go for incorporation relief, as she intends to sell all of her shares in Grow Company in the next few years, you should include a summary of your calculations and a statement of the key issues for me to discuss with Kamila. Okay, so the statement of key issues as well as the calculations. You should also include brief explanations of the amount of incorporation relief available. Okay, the availability of any additional or alternative relief, and the due date for payment of CGT. So, any other relief, incorporation relief, CGT, and uh, what will be the impact of incorporation relief on the selling transaction. So, all that we have to write in this question. Understood the question? Now, let's go to the exhibit and parallelly we will solve it. Okay, so we have done the trust part also. Now, let's do the next part. Okay, Kamila, gift of shares is given to you that on 1st May 28, Kamila will give 40,000 of her shares in Glow Company to her son. Okay, and on May 28th, and the market price is 6 per share. Okay, 40,000 of the shares to Glow. Now, how would you deal with it? First, tell me one thing. Here, there was one more portion that we have not covered. This one. The sale of business on 1st February 27. Let's just increase it. Now, I'm just reading this paragraph. The assets of the AK partnership business have been valued as set out below. All of the equipment they qualified for capital allowances. Okay, we are just reading the part. I've not solved anything. We are just reading the third part that we need to do. Okay, so I'm just reading the exhibit, and then when I solve it, you will understand that how we are solving it. Okay, so I'm just reading this part. The sale of the business on 1st February 27. The assets of the AK partnership have been valued as set out below. So, what are the details given? And all of the equipment they will qualified for capital allowances. Goodwill, inventory, and receivable equipment is no item to be sold for more than the cost. Okay, that is given to you. Inventory and receivable cost is given to you, value is given to you, goodwill is given to you, and equipment is given to you. The total value of consideration will be equal to the value of the assets sold. Okay, so the total value of consideration is the value of the assets sold that we are going to work out. That will be total value of consideration. Aruna and Kamina will each receive consideration of 10,000, and which is going to be broken up into 100,000, in cash for each of them, and the remaining by way of 2 lakh shares in Glow Company. Okay, each is going to receive that. Clear? So 110,000 in cash and the remaining of the shares in Glow Company. So all this data is given to us. Now what we have to do is, first we have to ascertain whether incorporation relief should be given or not. Madhvan, I will just open the exhibit of the question. I want you to go through it first, and then we will discuss the answer. Since you missed out on the question, kindly just read it quickly, the Kamila part. Only the Kamila part, please, just quickly. Done. And then I will do the calculations if we take incorporation leave or if we do not take incorporation leave. Okay. Now, first step is what will be the chargeable gains, because then only we will comment on the relief, right? So here when I take the third part, calculation of Chargeable gains, because incorporation relief is on chargeable gains, right? So first step, calculate that. Calculation of chargeable gains on the sale of business. Okay, now please look here which items would be eligible for that. So goodwill, yes, it is a business asset. We will consider here chargeable gains. Inventory and receivable, it's a normal current assets and current liabilities that are not current assets, and these are current assets. Current assets are not covered for chargeable gains, right? Equipment, no item to be sold more than the cost. So if no item is to be sold more than the cost, then there will be no profit. Since there are no profit, no gains also. Correct? All this what I'm writing, saying, you will write it down. That for inventory and receivables, you will write down that these are current assets and they are not subject to chargeable gains. Number two, for equipment, since the question mentions that no item will be sold for more than the cost, hence there will be no chargeable gains. You will write it down. I am doing the calculation of chargeable gains for goodwill. So chargeable gains on goodwill will be the sales value, the consideration is 1900,000, cost is zero. So chargeable gains will be 1900,000. Because as it is, the question says that the AEA is fully used. Okay, so I hope I'm clear. Now, the chargeable gain for goodwill for both the partners would be this is Aruna and Kamila. So, Aruna's share will be 50% and Kamila's share will be 50%. So, both will get this multiplied by 50%. Done. So we have got Aruna's share, we have got the Kamila's share. Now let's calculate whether incorporation relief can be claimed or not, or any other relief can be claimed. Okay, so what I'm doing here is I'm doing the first option, that is option one. If incorporation relief is claimed, is um, if incorporation relief is applied. Okay, please look here. So we have now the sale consideration. The amount of share of chargeable gain would be the sale consideration. The question has already mentioned. I mean, not the sale, the chargeable gain. So I will write here chargeable gain on the uh, sale of goodwill. We are only looking for Kamila. The question only talks about Kamila, so I will not look into the other area. I will just look into Kamila. Clear? So now here chargeable gain on the sale of goodwill. Please do the linking as much as possible. 950,000. Okay, this is the chargeable gain on goodwill. Now we will do less uh, before relief, it is incorporation relief. That we will do as a calculation. Okay, now this we will do as a calculation, and then I will have taxable gains. Because AE is fully used, question has mentioned it. And then you will have CDT at the rate that I will discuss. Okay, let's calculate incorporation relief first. What, how do we calculate? We take proportion also, right? We take proportion of the proceeds that we have received in shares divided by total consideration, right? Because relief is only given in respect of the shares consideration. So here your gain is 950,000 multiplied by your relief before consideration is 10,000 less 110,000, which is 900,000 divided by 10,000. Okay, so just take it here and get the relief. Extend it. Okay. Okay, I will just do it. Wait. Madhavan, I want your attention on my screen. Okay, completely my screen. If you look here, what is the amount that is distributed to each of the partner? It is 10,000, right? Clear? Out of which cash is how much? 110,000. So what is the share proceeds? 900,000. Am I clear? Because how do we apply incorporation relief? Go back to your concept. We always take the chargeable gains multiplied by share consideration by total consideration. Right? So that's what we are applying. That's okay. Okay. Now we have got this incorporation relief. Now please reduce it and get the taxable gains. So your taxable gains we get is 103465. Now what is the CGT rate when we have the application of incorporation relief? See, what is the rule? The rule says, if you see here, the business is, when you sell off the business, there is one more relief that becomes applicable. Do you remember? When we sell the business entirely, there is one more relief applicable. Here we are discussing incorporation relief, but after incorporation relief also, now some balance is left 103465. Can I apply any other relief also when we sell off the entire business? Just think, when we sell off the entire business, which is the, yes, absolutely, very good. Very good. So you will mention it here. Since there is a taxable gain of 103465 arising after applying incorporation relief, hence on the remaining balance, we can apply BADR relief. The reason being it is the sale of a business. And sale of a business, which is 100% sale, so it covers for BADR relief. Done. Clear? Very good. So when I apply BADR, I am not writing theory that you will write in the exam, okay? Applying BADR, then my CGT will be taxed at 14%. Clear? Because you have applied BADR, so it is at 14%. So simply you take this multiplied by 14%. I get here 14485. So 14485 becomes my tax liability here. Okay? Clear? And by what date the tax will be paid? This is not a residential property gain where I have to pay the POA. It's a normal property, it's a normal chargeable gain, normal CGT tax. So it will be paid by the due date. For 27, the due date will be 31st January 2028. Clear? Done. So we are done with this. Okay, we are done with the payments, we're done with this, but now there's one more point. When there's an incorporation relief, comes the base cost also. And you know that these are just a deferment. So it's a very easy way to calculate, it's just deferment. So what will be the base cost? The base cost will be, you have just calculated the cost 900,000. Okay, and from this, then we will reduce the incorporation relief. So that will be 53465. So 53465 will become the base cost of the shares. Am I clear with this? Easy? Because we're just taking the base cost of shares. Of course, I'll just take the shares value 900,000. We have claimed incorporation relief on shares only. So reduced it and the remaining in the base cost. That means when you subsequently sale off these shares, you will not reduce 900,000. You will reduce 53,465. Done? Any questions? Please tell me, Madhavan, till this point. There was one more part that was asked in the exhibit. Let's go back to the question. Base cost, what, where? You have covered CGT? No, right? So when you cover CGT, you will see that when we calculate any relief, we also calculate base cost. Base cost means what? That when these shares are subsequently sold in the future, you will not reduce their original cost of 900,000. That is there, right? Out of 10,000, when we reduce 110,000, I get the value of shares, which is 900,000. That I will not reduce. Why? Because we have claimed a relief. So relief means it's a deferment. Deferment means what? That you're not paying taxes now, you will pay tax later on by way of reduced cost. So instead of taking a 900,000, I will just take a cost of 53,000 when I sell off those shares. Correct? So the gain that was arising now will arise that time because we have reduced the cost for future sale purposes. Am I clear now or not? Okay. Let's take the next one. So the question here says that the review should encompass the sale of AK partnership business This we have done. And the gift of shares to Camilla's son, and the effect of incorporation relief in the on the base cost of the remaining shares owned by Camilla. So that we have already done the base cost, as she intends to sell all of the shares to the PLC company, Grow PLC, in the next few years. I hope I'm clear. So now what we need to do is we need to also see what will be the effect of incorporation relief on the gift of shares to Camilla son. Okay, gift of shares to Camilla's son. But we have to first calculate the tax chargeable gain for the same. Okay, so I will write here um, calculation of incorporation relief and base cost and CGT. All the three, okay, as regards on the transfer of, on the sale of, what was it, sale or transfer? Just a minute. On the gift, it was gift, I think. Yeah, we did that. On the gift of 40,000 shares to her son. On the gift of 40,000 shares by Camilla to her son. Okay, let's do the calculations. So we can have the sale proceeds, that will be the market value. Sale proceeds will be on 1st May 28, the market value is 6 and 40,000 shares. So we'll have 6 multiplied by 40,000, right? And then we will reduce cost. Okay, and what is the cost of these shares? So, where is this 40,000 coming from? This is from this share only that they have received, right? From the business sale. So, he has received 2 lakh shares in totality, out of which 40,000 is given to his son. And the 2 lakh shares cost we have calculated here 53,465. This is the application of base cost. So, now how much cost will we reduce here? 53,465. Okay, this divided by what is the total number of shares? 200,000 multiplied by what is the shares that it is selling? 40,000. Okay, so let's reduce the cost. Okay, so we just get a cost of only 10,693. Yes, now calculate the chargeable gains. We get here 229,307. Now comes the question, ma'am, what is the tax rate that we should apply? When we transfer only these shares, it is no BADR, nothing is applicable because it is not meeting the 5% criteria also. Where I put?
Ma'am, 53,465
Where is the extra
divided
zero you are finding somewhere?
ma'am, 53,465 divided by
Just check
200.
where I have put wrong figures.
Ma'am, 53,465 divided by 200,000, right?
If there's any wrong figure, please tell me. Madhvan, please tell me if there is any wrong calculation that I've done. Clear? Okay. Now, can you check here that there any PADR applicable here? 53,465. So I've done 200,000 only, no? There are 200,000 shares. Look here. 200,000 shares. Okay, no issues, no issues, no issues. Okay, so it is 200,000 only. Now, what will be the rate of CGT? Now, is there any BADR applicable? No, there is no BADR applicable. The reason being there is not a transfer of business, and the shares are also not more than 5%. So, since there is no criteria meeting, no BADR is available, so CGT will be at the highest rate because they are additional rate taxpayers, right? So, CGT will be this multiplied by 24%, 55,034. So CGT is 55,034. Clear? And when it will be paid, again the same rule. So it will be payable. We have to just see the date. It will be paid by, now since no residential property, it will be paid by 31st January. But which 31st January? The gift is made on 1st May 28. It is in the tax year 28-29. So 31st January 30. Correct? 31st January 30. Done and clear till this point. This was the entire pointers that we discussed if there is incorporation relief is not claimed. Okay, now okay, now we will do if the incorporation relief is not claimed. We have done claimed. Now let's do if the incorporation relief is not claimed. Clear? Now the question is also asked you to give notes. So you can give note about the BADR that we discussed. You can give a note about the BADR thing as well as the incorporation relief that we calculated by taking the only the shares portion. We can also talk about that though there is a gift of shares, but we cannot apply the gift holdover relief because we can only apply gift holdover relief in case of the shares of a quoted company when it is up at least 5% of the shares in the quoted company, which is not criteria here. Hence, we cannot apply. Okay. And then since PADR is not applicable, hence we have applied 24% rate. You have to write them properly in paragraphs to make the examiner understand about. Clear? Okay, let's go to the next one. So next is we are doing this if the incorporation relief is not claimed. So claiming to not apply incorporation relief. Okay, so it is a claim made to not apply incorporation relief. Now do the same calculations, but just that we will not apply incorporation relief. So what I'll do is I'll just quickly copy this. So only wherever is the change I will do, it will help me save my time. Now sale proceeds are 950,000. That is, there is no challenge. It is 950,000. Just a minute. Okay, I'm just doing this calculation here. You cannot delete the cells. I will just move them here. Okay. Okay, now please eyes on my screen. So we have CG on the sale of goodwill. Now we will just be doing the normal ways. We will not calculate incorporation relief. Now since it is a sale of the business, we can have not incorporation relief, but we can apply BADR, right? So we will apply BADR here. So normal case. So on the no incorporation relief, the same will be taxable gains, right? So we can apply BADR normally on the entire calculation now, right? Taxable gains will be this and BADR will be this multiplied by 14%. Done? Clear? Clear? Okay, Madhavan. Now we have to, the tax payable due date, same. That will not change because it is not a residential gain. It really would not matter whether the gain is BADR relief or incorporation relief. It won't matter. Okay. Yes. So clear. Now we need to calculate the base cost. So base cost is going to be very, very easy. Base cost is same, it's the same shares, 950,000, and there's just a sale of shares. But okay, but we have the shares here. Shares are 200,000, right? And what value then we will take? Because earlier we had incorporation leave and we took the value of 5 on 1st July 27. No. Uh, the transaction took place on 1st February 27. So let's take the shares, base cost of the shares. 2 lakh multiplied by what is the rate on 1st February 27? 1st February 27, the rate is 4.5 multiplied. And that becomes the base cost. That is the market value of the shares, right? That is how we take. So 900,000 is the base cost of the shares. Clear? Now let's calculate for the gift of shares also. How would be the impact? So here we'll write B, gift of shares. Gift of 40,000 shares. Just look at my screen first and then I will take your query. Let me just complete this. Okay, so it's also normal case. Okay, wait, I'll take it. Yes, so how we calculated previous base cost, even if you don't have to look at the workings. What were the proceeds, Madhwan? Let's quickly have a look. What were the proceeds? The proceeds were 900. The chargeable gain was 950,000. Okay, what is the value that we took for the asset purchase? 900,000 only. The cost will not change. Here also we took 900,000 only. And even if you don't do 4.5 into 200,000, you know the cost of the shares was 900,000 because 10,000 you reduce 110,000, right? So the cost is 900,000 only. Now, when we take relief, that means this year I am paying very low tax. You can see here, we are just paying a tax of 14485. But see, the HMRC never tells you that, look, I'm giving these gains free of cost. You don't have to pay taxes ever. You pay tax. The only thing is you enjoy deferment. So some tax you're paying now and some you will pay later by way of a reduced base cost. Here the base cost is 53,465. So base cost simply means what is the cost remaining after the adjustment of relief. And here you can see the base cost is 900,000. So we are paying more taxes now. You can see 133,000. Okay. And so nothing will be recovered in the future. Am I clear now? Please tell me, Madhvan. Are you now clear or still not clear? Okay. Okay. Now this is simple. The gift of 40,000 shares, 240,000. And what will be the cost? Now your cost is now 900,000, right? Now the cost is 900,000, the base cost, and not 53,000. So the entire calculation remaining same. Just that in place of 53,000, we will use 900,000. So my cost that will reduce will be 180,000 and the chargeable gain will be 60,000, correct? So what will be the tax liability at the rate 24%? 14,400 and the due date will remain same. Are you now clear? So what difference do we make with incorporation relief? My base cost reduces, everything reduces, but without incorporation relief, everything is same. Tell me if you have any queries till this point. Okay, go through it. Go through it and then tell me. Done? The base got okay. I will do it again. Look here. Okay, now you will answer me. Let's do it very logically. What is the cost of shares? Can you type that? You type your answers and you'll get your answer. What is the cost of the shares? 900,000. Very good. What is the relief that you are enjoying in case when the incorporation relief is claimed? Incorporation relief will reduce your chargeable gain liability, correct? What is the gain that you are enjoying? Right. So in future, when you resell these shares to a third party, correct? What cost ideally you should reduce? 900,000. But HMRC says, boss, I gave you relief of 846,535. So I won't give you that benefit again. That means you will have to reduce your tax liability. Correct? No, it is cost less relief. So now how much do you get? Please calculate. Yes. Are you getting it now? 53, 465? Great. Good. Okay, so now let's move forward. So now we know that this calculation is easy. This is pretty clear. So now we have done this. We have done everything. We're done with this part. We're done with the 14 marker. Was it difficult? Of course, you had to write theory also that I had said, but yes, we have to give a conclusion. So we can write it over there that if who is this person? If a claim is made for incorporation relief, then initially the tax liability will be lower, but later on it will be higher by way of reduction in the base cost. However, if incorporation relief is not claimed, then initial liability will be higher, but in future the liability may be lower. Okay, because of the base cost being higher. Now, whether incorporation relief should be taken or not depends upon the category of the taxpayer also. Like here, the category is 24%. If in future we are expecting to remain same, which as per the question, yes, then it won't matter whether you go for relief now or later. Though it will just be a matter of in this. I'm sorry, just 1 minute. Sorry. Okay, so it will just be a matter of the deferment, right? If we are expecting that my tax rates will remain same, my liabilities would remain same in the future almost, then it won't matter whether you pay taxes now or later, right? It is just that it will affect your liquidity. So talk about this also as a conclusion part. Clear? So we should always conclude our answer, always. Okay, any questions till this point? Are we clear? Can we move on to the last part of this question? So we are done with almost 39 marks. Okay, and now we're just left with 11 marks. That's all done. Okay, let's go to the last part. The last part of this question tells me Nova Limited, that is looking at the Exhibit 2 now. Please review the computation and the related notes in Exhibit 2 in order to identify any errors. So that's very simple. Format is already given to you. You just have to identify the errors and correct them. And prepare a revised schedule showing calculations of the correct taxable total profits and the corporation tax liability. You should include notes explaining the errors you have identified and the changes you have made. So that notes I will discuss orally, and those notes only you have to write it in your answer. Okay, Madhavan, on a serious note, the notes that I discussed, was it really technically difficult to write? Is this theoretically difficult to write? All the discussions that we're doing? Fine, right? So this is the theory part which you have to write in ATX. So whatever you're calculating, you just have to explain it in the paragraphs. That's all. Okay. Now let's look at exhibit 2. I think it's going to be comfortable exhibit. Let me just stretch the screen. Okay, so the background is given to you here. Information provided by a manager and computation prepared by tax assistant. Background is given for Orbit Limited Group. Okay, now information provided by a manager and the competition prepared by tax assistant. The background is this is the Orbit Limited group. You can see Orbit Limited is having 100% holding in Nova, so they are part of the group. Okay, all five of the companies are UK resident trading companies. The only changes to the group structure in the recent years relate to the purchase and subsequent sale of purchase of Luna Limited and subsequent sale of Luna Limited as set out in note 3 to the computation below. So we will see note 3. Astral Limited has no links to the Orbit Limited group other than its shareholding in solar. So if we just review it, Orbit and Nova is 100%, Orbit and Luna is also 100%, Orbit and Solar will be, Nova and Solar is 25, so Orbit and Solar is also 25. Okay, Astral in Solar is 75. Okay, so if we talk about 75% group, and then it will be Orbit, Nova, and Luna one group, Astral and Solar another group. Okay, now uh, Astral has no links to the Orbit Limited group other than its shareholding in Solar. So the corporation tax computations for the year ended 30th June is given to you here. Tax adjusted trading income, sale of Luna Limited proceeds, but we never take proceeds in the corporation tax computation. We take chargeable gains, right? So like this, we'll do the corrections. So it's proceeds less cost and annual exempt amount. Okay, and do we take annual exempt amount for a corporation? We never take, right? That's only for individuals. Now, losses is transferred from Luna from Solar. Can Solar transfer losses? So, like this only, we will be doing the checkings part. Okay. No, it is only for Nova Limited. Now, Nova is a part of which group? Nova is a part of Orbit Group. Okay. Now, here so here we have TTP and then corporation tax. The details are given to you here. So we will do it here, the C part. Calculation of TTP and corporation tax for Nova Limited. Okay, now look here. The treatment of following items of expenditure needs to be checked. Okay, so let's take one by one. I think we will just draw down everything and then we will take one by one. Okay, first is tax adjusted trading income. Tax adjusted trading income. I can just copy it. Okay, it is 190,000 given to you. I will write it here. Okay, now please see the exhibits and one by one we'll see everything and we'll do the corrections. So it has got note 1 and 2. Now please see note 1 and 2 and that says the treatment of the following item of expenditure need to be checked. The cost of establishing a non-tax advantage share option scheme. So the cost of establishing the scheme. What do you think, Madhva? Now let's have inputs. What do you think? It is allowed or disallowed? Should we keep it like this? Because it is allowed in the calculation of 190,000. Allowed means it has been reduced. Is it correct or should we add back? The cost of establishing a non-tax advantage shares option scheme. Non-tax advantage means it is not approved by HMRC. So will the expenditure be allowed or disallowed? Tell me quickly. Yes, very good. We need to add back. So I will write here add back, and we will add back here cost of establishing non-tax advantage share option scheme. Right? So it will be 7,000. Okay. Now next is the cost of entertaining staff. It is allowed. So I will write here cost of. No, I don't need to write because I'm not adding back. Accrued management bonuses to be paid on 1st May 27. And when is our period ending here? 30th June 26. So this will be paid on 1st May 27. Correct? So it does not belong to this period only. And accrued management bonuses. Hence, we will not take it here. Right? Because they are a part of the next tax year, next accounting period. So I will write here accrued. I'm sorry. How to rotate it? Just 1 minute. How it got rotated. Okay. So it is accrued. Accrued. That's the problem with CB platform. Sometimes it automatically just gets closed. Accrued management bonus. We will add back 11,000. Okay, now the next one. It is referring to note 2 also. The tax adjusted trading income. Okay, the tax adjusted trading income is after deducting a total of 45,000 in respect of the research and development expenditure. Remember the RDEC scheme that can be applicable you. So that expenditure is allowed to be deducted. The expenditure is consisting of salaries to Nova staff 19,000 and the payment for the subcontractor labor. So if you remember, we have disqualification. Do you remember? If you remember that RDC is only applicable for 65%. Absolutely. Oh, yeah, yeah. You must be knowing it then. Yes. So it is only 65% that is allowed, right? So here, what will be allowed expenditure? 19,000 will be full salaries, but the payments for the subcontracted labor will only be allowed for 65%. So here, how much is the disallowance? And the difference is disallowance. So here I will write for RDE scheme. RDEC scheme. The amount that we have allowed is 45, right? So how much will be disallowed? Will be 45,000 less. What is allowed? 19 plus 26,000 multiplied by 65%. One close, two close, three close. So we get 9,100. That means 9,100 will be disallowed, is it? Have I done the correct calculation? Oh, I'm sorry. Allowed is only 20%. Wait. There's some formula error that I've done. Probably. Let me just work it out separately. So what is the allowed research and development expenditure? What happened? Just, sorry, just 1 minute. Yeah, sorry. Okay. So now if you remember for the RDEC scheme, if I just give you a recap, what does the RDEC scheme says? RDEC says that all the research and development expenditure is allowed. That's not a problem. But we take 20% of the qualifying expenditure, right? And that 20% of the qualifying expenditure will be added here. So will be added here, and the same we reduce as a corporation tax liability, right? So the same thing we are going to do here. So we are just going to add that 20% of the qualifying expenditure. So I'll just calculate it quickly. 20% of what? Of the qualifying expenditure. And what is qualifying? Qualifying will be 19,000 plus 26,000 multiplied by 65%. Agreeing, Madhavan? So 7180 I will add here, and I will reduce it also when we calculate corporation tax liability. I'm sure you must be doing this. So we have done with this, the 1 and 2 adjustment. Now when, Madhvan, you're with me, just tell me please, are you in line with RDC scheme? So basically what we do, add the income by it, but we reduce the tax liability also by it. So it's a big advantage for the corporation tax liability. Right? It is given to the corporations for the promotion of these schemes. Okay. So it just talked about note 1 and 2. Right? Anything else? No. Note 1 and 2 we have done. So first calculate the tax adjusted trading profit. So here I will just add them and I will get here. I will write here tax adjusted. Okay. Tax adjusted trading profits. Correct? Tax adjusted trading profit. So we're done with the first part or the first major calculation. Now let's do the second one. The second one is about note 3. Note 3 is about the sale of, this is the sale of Luna Limited shares. Okay, so let's do it here. So I will write here sale of Luna Limited. Writing here is such a big challenge. Sale of Luna Limited. Okay, and we will calculate here chargeable gains that we'll be adding here. Okay, that will be adding. Now let's do the calculation. So we can do it here as well. So what will be the calculation? The sale is 517,000. And with this, we will reduce 410,000. But we will add back AEA. AEA will not be reduced. Definitely, it will not be reduced. But there is a note also given. Let's cover that note also. Third note says Luna Limited was purchased on 1st November 25. On 1st February 26, Nova Limited signed a contract to sell Luna Limited for 517,000. I will just do it in the bracket as it is said. 517,000 is the proceeds. And the sale took place on 31st March 26. Accordingly, the substantial shareholding exemption was not available. Okay, so substantial shareholding exemption was not available. The sale of Luna Limited resulted in a degrouping charge. Degrouping charge will increase the gain. So that is not done. We need to increase it. So here I will add 33,500 also, and I will reduce the cost. Clear? This has been included as a chargeable gain in the corporation tax computation. So where it is included? I cannot see the chargeable gain where it is included. It is not included. So only the transaction is included, but not the degrouping charge. Okay, now I will reduce the original cost. So sorry, because of the disturbances. Okay, so now it is 517,000 plus 33,500 degrouping charges. They will be added, they will increase the gain. And less 410,000 cost. 3,000 I will not reduce because it's a corporation. Only individuals get annual exempt amount. And here we get indexation. Okay, nothing is mentioned about indexation, so we assumed it's an indexed cost. Now I will add here. Now I am getting the gain of 140,500. Clear? Done. So we are done with this part also. Now after this, there is a losses adjustment. So for that, first get the total. So the total I get here is 355,680. Now I will reduce the losses. So I will write here less losses transferred from. Okay, we have first Luna Limited. There is a note given. Let's see, and accordingly we'll do the calculation. This is note number 4. Okay, note number 4 says Luna Limited made a TATL of 72,000 for the year ended 30th June 26. And this is also year ended 30th June. So years are coterminous. And Luna Limited is a 75% group company. It can share the loss. Losses were 72,000. And here we have taken 72,000 into 5 by 12. But will we take 5 by 12? When is Luna Limited joined the group? Because there was something given about purchasing. So when it became a part of the group, is there any other information also given? It is given here. Look, Luna Limited was purchased on 1st November 25. So it was purchased on the 1st November 25, and the year is ending on, when is the year ending for Nova? Because here we are doing for Nova, 30th June 26. And when it got sold, Luna Limited got sold also in the year. It got sold on 1st February. So basically, Luna Limited was only there for November, December, January, 3 months. So instead of taking for 5 months, that was given here, now the losses we will just take for 3 months. That's the change. So here I will do the working and I will write here 72,000 multiplied by 3 by 12. I hope now you're clear why. You will give it as a note because Luna Limited was purchased on November and sold in February. So it was only there in the group for 3 months, right? So here I will reduce the loss. 72,000 multiplied by 3 by 12. Now the next one. The next one is from Solar Limited. Solar Limited, if you look here, Solar Limited is just having we are having the share in is only 25%. It is not a part of 75% good. So will the losses be shared? No. So here there'll be no sharing of losses, no transfer. So it's clear. So now here we will just take the loss of 18,000. Absolutely correct. Good. Okay. Now let's go to the next one. So we have the next one as TTP. Now we have nothing else but TTP. So let's calculate TTP. So TTP would be 337680. Now we have to calculate corporation tax at the rate 25%, which you assume is correct. And here also the TTP is also on the same line. So it is correct. So corporation tax is, sorry, 84420. Now, don't forget to remember to reduce the RDEC also. Okay, so I will reduce RDEC. The same amount that we have added, that is 7180. Okay, and always do linkings in the exam. Done, clear. Now you just have the remaining corporation tax liability payable. Right, so the payable liability will be this plus this 77240. Why? We will do 7180 multiplied by 25%. No, we reduce the entire amount. We reduce the entire amount. RDEC is reduced in entirety. Yes, yes, have your basics clear. Yes. Okay, so yes. No, we never reduce only the tax portion. That is the beauty of RDEC scheme, that you add the income, but you reduce the tax also by the same amount. So yes, it is more beneficial because you're reducing a higher amount in terms of taxes, but in terms of income, you're adding the amount, which eventually gives you a 75% advantage. Clear? Because you're adding the income that is subject to 25% tax. So 75% you're getting as an advantage. And that is what RDC scheme is beneficial about. Clear? Yes. See, that is what these small things you will be able to understand better when we do questions. And when you also do questions. Okay? Yeah. So I hope any doubts till this point, please tell me. Clear? Okay, now I think we can just look at the additional points. Some additional points were given by the manager. Let's have a look at it. The corporation tax competition for Nova Limited for the year ended 30th June has been prepared by an inexperienced tax assistant, may contain errors. I have established the expenditure incurred by Nova Limited on RDEC is qualifying expenditure for the purpose of RDEC relief. The payments for subcontractor labors were made to an unconnected external subcontractor. I can confirm that this SAC is not available in respect of disposal. Accordingly, we have also not taken that the figures given for cost in the schedule, the degrouping charge in note 3 and the TATL have all been calculated correctly. So why this is given to you? Because when you have skepticism, you do these calculations corrections. So when you do this part correctly, you get especially the skills marks for skepticism. Okay, any questions, any doubts, Madhavan? We are done with the 11 marker also. We are done with the entire section A question. And with all the explanations also I've given you, with the time also that we took a max of, see, we started by that, we begin, so around 1 hour 45 minutes only. 1 hour 45 minutes with the detailed explanation that I did, we were able to do section A. So in exam, don't you think it is easily doable in around 1 hour 20 minutes to 30 minutes? I think it is easily doable.